Please join me in welcoming our presenter, Laura Redmond. Laura Redmond, awarded the 2019 Top Client Accounting Services Pro Advisor, is the founder and CEO of Redmond Accounting Incorporated. Founded in 2005, RAI is a boutique accounting firm providing client accounting, advisory, and consulting services centered around QuickBooks Online and its ecosystem of apps. Laura created Arrow Workflow, an app used by accounting firms to distribute their knowledge capital, delegate work to a distributed workforce, and manage service delivery. Laura co-authored many of Intuit's QuickBooks Online certification programs for accountants and presents sessions at national accounting technology conferences. Now that you know a little bit more about her, I'll send it over to Laura so that she can dive into today's presentation. Laura, the floor is yours.
Thanks, Megan. Hi, everyone. Thank you for showing up here today. Okay, so let's get started today. I wanted to tell you, I'll take from where Megan started, just a tiny bit more about myself so that you know where I'm coming from, what my experience is, where I'm speaking from. I do run an accounting firm called Redmond Accounting, Inc., and I'm based outside of San Francisco in Silicon Valley. All of our staff are US-based and in multiple states. Everyone works from home, so we're all remote, and we use all web-based apps. And in 2010 to 2011, we moved all of our clients to the cloud by using QuickBooks Online and Bill specifically. Those were like the cornerstone of our business. So our specialty is like paperless web-based accounting departments. Our accounting firm does not do tax and does not do audit. The accounting services that our firm provides is what our profession calls CAS or CAS, which stands for Client Accounting Services or Client Accounting and Advisory Services. I see the AICPA sort of using both terms. But that's where we act as the accounting department for our clients. And we do things like invoice our clients' customers, pay their bills, process expense reports, run payroll, do all the bookkeeping, GL. So we act as the bookkeeper and the controller, sometimes the CFO for our clients. We also provide technology services, not where we're going out and building computers for them, but technology services related to accounting. So we, in that division of our firm, we do a lot of implementation, training, configuration, and getting people set up in the cloud so that their in-house accounting departments can then take it from there and run with it. One thing to note about our firm is that we're big on process and workflow management. And that's the app that Megan mentioned. We built an app. This is our firm's 20th year. We started in 2005, and our firm and our first client were on QuickBooks Online. And so about 10 years in, about 2010, we built an app to help us systemize because we had staff in all different places. We had all different clients and all different tasks we had to do at different frequencies. So we built that app that's called Arrow Workflow. That's spun off. That's a separate company. Arrow Workflow is an app used by accounting firms around the world. And so all of the services we provide for our clients, our firm still runs on Arrow Workflow. Most of the work we do is recurring, and it's delegated to our various staff. So we feel pretty strongly about process. And you know, as accounting professionals, we're big. We love Excel spreadsheets. We love process and documented procedures and just doing things consistently and really well, because a lot of the work we do is tedious and you know, has to be done correctly. So, and then our newest venture in our firm is called Redmond Academy. We've created online courses. For example, how to close the books in QuickBooks Online. These courses assume that you know accounting and assume that you know QuickBooks Online. We know that there are wonderful free YouTube videos and other amazing courses to teach kind of the beginner. This takes from like the intermediate and advanced to work on and teaches you that kind of thing. Okay, so now you know where my experience is in running accounting departments. And since Bill was so kind to sponsor today's webinar, and because I have been using Bill for so long and am more familiar with it than others, I'm going to use Bill as an example for most of the concepts in this webinar, because honestly, it does cover all of these things. And that's why it has helped our firm be successful in this cloud accounting world. Okay. I'm going to start just with a little bit of story time. So just so that we can talk about and learn to identify some common fraud schemes. So I remember I was just saying, this is our firm's 20th year in business, and we are not certified fraud examiners at all. We're just a regular CAS firm, no specialty in fraud. So if I were a fraud firm, I would expect that fraud examiners would see a good bit of fraud because they'd be called in on fraud cases. However, in our firm, even though we're not fraud examiners, we still have seen multiple cases of fraud. So I'm just going to talk about a few of those stories that we've come across in our 20 years that just happen in the normal course of business. So if you've been witness to fraud and seen some of these things, then these stories will probably resonate with you. If you have not seen this before, then my hope is that these stories help you prevent it from happening to you and your clients. I do not mean to incite fear here. I don't want to add any anxiety, but I really do want everyone to have sort of the information that we need as accounting professionals. So the first story I want to talk about is one of our clients. We got a call, or it wasn't a client yet. This was a prospect. We got a call from this company. It was a growing company in Silicon Valley. They had over 50 employees, and they had been referred to us as a trusted accounting professional because they were freaked out when they called us. They didn't know who to trust. They were nervous and they needed help. And they needed help fast because their bookkeeper, who was an employee, had just quit. And one of her duties had been to prepare the weekly check run. So she did the bill pay to their vendors every week. And the company's check stock that she had to go get to put those checks through the printer, those blank checks were kept in a locked drawer in the manager's desk. So one of their controls was that each week the bookkeeper had to show the manager the list of bills that needed to be paid. And the manager would then unlock the drawer and get out that exact number of checks and hand it to the bookkeeper to go do that week's check run. So the bookkeeper would print the checks and give them to the manager to approve, and then they'd give them to the CEO to sign. And as they were talking to us and telling us about what had happened, they did mention that several times recently the bookkeeper had some trouble with the printer. There were printer jams and she needed an extra check here and there. And that happens. We all know frustration with printers. But when the bookkeeper quit, the company had to jump in and take over her duties and do these check runs. And when they got the next bank statement in the mail, there were copies of cleared checks in it. And they saw that the bookkeeper had been printing checks made payable to herself and forging the principal's signature. And those extra checks that she had requested, she got because of the printer jam. There really had not been any printer jams. And those checks added up to $17,973.53. This company had a lot of financial activity, and they had credit cards and checks and all kind of activity on their in their general ledger. And they felt that they could have missed finding this so easily. They just happened upon it. But they really felt this could have gone undetected. Their accounting records were in QuickBooks Desktop, which was loaded on the bookkeeper's laptop, and nobody had her password to log into her laptop. And then even if they did get into her laptop, they didn't have the password to log into QuickBooks Desktop. So nobody was ever watching what she was doing. Anyway, when we came in, one of the things we did was to move them onto QuickBooks Online so that the CEO and the manager could now just pop into QuickBooks anytime they wanted from any browser. And the new bookkeeper that they were going to bring in had all access to the books also. So they all had this access. That was really important to them. And then we set them up on bill so that their bill payments would now require multiple approvers, and they no longer had to worry about paper checks and printer jams. Okay, so story number one is beware of employee fraud. We've seen this happen multiple times. This is not the only story we have, unfortunately, because everybody loves the people that they work with. Most of the time you've hired this person because you trust them and they're competent, but it does happen. It's not uncommon. And I just want to throw in a fun fact here, and that is, if this does ever happen to you and you can't recoup the funds, you can at least file a 1099 for the criminal so that in addition to whatever punishment they may or may not receive, they would also have to pay tax on the amount stolen or deal with the IRS. Okay, that's just kind of a fun fact. But yes, I see some of you asking about positive pay and things like that. The company, you could then use positive pay. The company didn't know about that at the time, but it is baked into bill. So positive pay is just automatic with every bill. And then you don't have to when you use positive pay outside of bill, you have to, once you run the checks, you have to go upload it to your bank and make sure your bank knows the checks. It is more work. It is absolutely worth doing, but it is more work. When you use bill, it's all baked in. You don't even have to do that extra work. Okay, next we're going to move to my second story, which is beware of check fraud. So this story starts off when our client called us and told us that a police officer from Oregon had just been contacting them. We were their long-term accounting department, and we processed all their bill payments for them. We were doing bill pay like daily. This is a really large organization. And we had done it for years. So they called us and told us about this police officer. And the police officer said that his police department was investigating a check payment made by the organization, our client, and that some individual was trying to cash this check and it had been flagged as fraud. So he was calling the company to verify whether this check payment was legitimate or not. So when our client called us to say, why is this police officer calling us? What do we do? The first thing we did was we looked up the public number of that police department because we were like, is this a real police officer or not? And we called the police department through the public, finding the police department's number publicly. And we called the police department to verify whether that police officer was even on staff there, if he was legitimate. He was. And then he sent us a copy of the check. And sure enough, our client, the organization's remittance name and address was in the upper left-hand corner. All that matched. It looked like the checks that we sent out through bill. And it was the exact name and address. All of that part checked out fine. However, the payee name and the dollar amount on the check that he sent did not match any of the bill payments we had recorded on the books. So someone had gotten a hold of one of our client's checks because everything else looked legitimate about it, and they had altered it. Then it got a little bit weirder because over the next few hours, we started getting calls from other states about checks issued by the same company, our client, that did not match anything in our system. And they were like, $1,900, $2,300, $7,800, and then $480,000. The check that had been stolen and washed had then not just been used once, but it had been duplicated and used multiple times all over the country. So this group of fraudsters, or this one single fraudster, felt like a group, had taken it nationally. Washington State was calling, Georgia was calling, Maryland was calling, and anxiety was rising. People were freaking out at that organization and our firm. We were like, wow, we are under attack. So our local precinct here, our police station here this is Palo Alto, Silicon Valley area, stepped in, and they led a multi-state investigation with all the various precincts around the country that were involved in this case and calling in. And the fraud attempts continued to happen. Fraudulent checks attempting to be cashed, that continued to happen for several months. In the end, the lead detective sat down in a conference room table from me, sat down across the table from me and the client, that organization, and their legal team and their security team, big room, and the head lead detective confirmed that the reason why not one penny was ever taken from our client was because of Bill's fraud preventative features. So our client's checking account was safe the whole time. Bill's routing and account numbers are on every check that goes out. So nobody actually had our client's checking account number. And that kept us safe. In addition to that, Bill uses positive pay on all their checks automatically. So none of those fraudulent checks were ever successfully cashed. So even Bill was safe. But it could have been a disaster. So story number 2, beware of check fraud. Again, hopefully these stories mobilize you to protect yourself from any of this happening to you.